How's your, is it called MetaTrader? Because one says white something. So now I have downloaded this one. This says MT4 at EasyForex.
Yeah, it's one platform, but different broker using. It's okay to use
This is this one.
Yeah.
So maybe I use this one. So you can't use the other one.
Which other one?
The Meta, okay, so the other one that I have is this one. MetaTrader 4.
Okay. Who opened this? You did open this.
Yeah, so this one, no, so this is the one that I had previously, and this is the one that I have downloaded just now. Something I downloaded.
Yeah, but why did you download this one?
Because I couldn't log in that in the other one with my logins.
Oh, which one is it?
Is this one.
This one.
Yeah, this
No, but why do you need to log in? You're already logged in. Ah, because it's saying no connection. But you're online.
Yeah. So yeah, I have issues like that.
Anything related to EasyForex, obviously you can speak to them. They're open 24 hours a day.
Okay.
They're very helpful. The guy's name is Jay.
This one.
Jay.
Yeah, they're really good.
It's for support.
Yeah, he's the manager there, and he's a good friend of mine.
Okay.
And they're very helpful. So.
Are they here in UK?
Yeah. Yeah, if you speak
And
to him.
Steve?
Steve, I don't he must be, I think he's a new guy, I haven't spoken to him yet. So maybe
He's my account manager.
Alright, maybe, yeah, then he's here in the UK. Yeah, then they're here.
So my question was, so you know the tool that we downloaded, the MetaTrader 4?
Yes.
During our seminar. So I have downloaded it. I have signed up to EasyForex, but I can't log into MetaTrader 4.
I thought maybe it's expired.
No, it's not 5, it's 4. That's fine, that's normal. And you can't log in using what they sent you.
The logins that I have from EasyForex.
Okay.
So now I have downloaded the MT4 at EasyForex because the other one says the other one says when I go to download it says Lead Forex demo.
That is very different.
Yeah.
Which is not going to work with your login because your login is EasyForex. So if you use the other one, then they don't recognize that. So it definitely work with that one that we're downloading. If not, if this message is appropriate. Okay.
Still not
No.
Hello, this is Jay.
Maybe I need to put like a number, not my username.
Nice.
The client ID.
Just ask them. Nice. Hi there. My name is Rishi Patel. I'm over at Boston office. Who am I speaking to? Hi. I'm one of your IPs. I think we have a client who's having some trouble logging in. It would be great if you could give her the phone and speak to her and just help her out. That's her name. Okay, perfect. Account number. Okay, let me give you her account number. Bear with me just 1 minute.
Is it user ID?
Is it a user ID? Yeah, let's give that a go.
33
33
77
77
843.
843 843. It's Christina. Her surname is really long. It begins with a T. I can't say it. Yeah. Okay. You know what? I'm gonna put her on the phone, and she's gonna walk you through it. Is that okay? Great. Your name again was Bharat. Okay. Right, it's Christina.
Hello.
Problem solved. Not my speciality.
Hello. So I have two issues now actually. So one of them, I was so I have downloaded the MT4 at EasyForex to trade. Is that the correct tool that I should have downloaded? Cool, okay. So what I'm trying to log in, I can't say no connection for some reason. So I'm using my username and then my password to log in. And the server says EasyForex demo. Okay, so let me try with that one as well. So the demo and the live, they have two different logins. Yeah. Okay, so again, nothing happened. So I tried with the live one, but nothing happened. So it still says no connection. My login is T and then Christina. Yes. 77808. Ah, okay, so 3308. 80, okay, yeah. 929. And then my password. Invalid account. Yes. Yes, so. Okay. Yes, this is invalid account. Yes, I do have some. And also, in my EasyForex interface account, why does it say free balance zero? What does free balance mean? Yes. So where can I see that? Where can I see that?
I'm waiting for severe, and that's
Yeah,
ready
cool.
for under kickoff and see it's ready for kickoff.
Ah, okay. First one. So can you remind me my number is 3380 and then and it should be EasyForex Live. Huh? Yes, it did something. Cool, okay. Okay, thank you.
Sounds like we're there. Sounds like we're there.
Where should I see that?
Sounds like we're ready to go. Everything's up.
We're almost there.
Now for the trade, yes. Ah, yes, I can see that now.
What a pleasant surprise. Top man.
Okay.
Okay, perfect.
Okay,
So let
that
me come
sounds
down
good.
and find you.
Yeah. So if I want to use the demo account then, do I need different logins? Okay, wait. One by one. So I'm in the web interface now. Where should I go? Alright, okay, cool. Demo account. Okay, I see, yeah. Cool, okay, thank you very much. That was the main issue actually for me. Okay. Okay, thank you very much. Thank you. Bye.
You all sorted out.
Yeah, so now it's fine. So I just need to open a demo account.
That's good.
Okay. Yeah, absolutely. Business. Just a couple of days, but still fun.
Hello.
Hello, how are you?
I'm very well,
Good
yeah.
to see you. I'll get out.
But there is a kitchen upstairs.
How are you?
Yeah, very well.
Excellent. Dedicated.
Well, I came twice, so yeah.
Yes.
But I haven't tried yet though.
Sorry, you haven't tried
time.
yet?
Every time.
Getting everything.
Well, I think we should do the account, my login.
Okay.
Likewise, I've got some.
So I just sorted them.
You sorted them now?
Yeah, just now.
Hello.
Awesome. I'm Able.
Eman Able.
Able.
Able. A-B.
You are more than able.
Well, by name at least.
Name and nature.
Okay, thank you.
Perfect.
Mr. Sebastian in today, or?
Sebastian has left for the day. He finished at 6.
Ah.
So it's just me manning the deck.
I thought you were, all your sleeves.
Oh no, absolutely, yes, there you go. Okay, so welcome to the weekly group coaching session on 20th May.
Oh, there are people
2014.
online.
We are live online, so we have to behave ourselves today, and yeah, welcome to those of us joining us online as well. So again, if you report any questions, you can type them through, they'll come up on the chat and we'll pick them up, so not a problem there. Otherwise, we're going to kick off this evening, and this evening's topic is all about risk management. Right. So what we're doing basically is to give the newbies a summary of the Hello. Hi. Another surprise. Look, lovely. It's Jacqueline, everybody.
Hello, Jacqueline.
Your hand. It's Jacqueline.
Jacqueline's in there. Hello.
Look, you want to go around there and get a couple of people.
Hi, Jacqueline.
We should do an intro thing, really, should we? Let's do a quick intro thing. Okay, so everyone's going to tell us their name and a little bit about themselves. Maybe like 30 seconds, and then we'll carry on, right?
Cool.
So, Eamon, you go first.
My name is Eamon. I am awesome. That's it. No, I'm Eamon, 29, management consultant.
29.
29 years, 29 years young, and I went to your 2-day program about 3 weeks ago now.
Brilliant. That's Eamon, everyone. Christina.
So my name is Christina. I was in the same seminar as this guy.
Eamon.
Eamon. Yeah. So I haven't started trading yet. I will be happy.
Brilliant.
Awesome.
As Jacqueline, that's Eamon driven my phone again.
Jacqueline. I think I joined February.
Okay.
I remember. Been trading, following the trades, and so that's me.
Okay. Brilliant.
I'm Abel. I went to the Traders Base Camp in March, 30th of March. I had been trading for a year or so, but now I'm learning properly with MTM. And here I am.
Nice.
Brilliant. Good stuff.
Coaching session.
Okay, so good. So just an intro to what we do, our weekly group coaching sessions. So just so we normally start at 7. It's running a touch behind this. Okay, we'll make it for a little bit of time. I will basically go through myself or Kiro, will basically go through a topic from the Traders Base Camp manual. We'll drill down into it into a little bit of depth. We'll go over it on some live charts so we can actually just experience what we're talking about as opposed to just theoretically talk about it. That'll be the first part, so we're going to go over risk management today. And then we're going to apply that to the market, as I said, real markets. And then what I'd like to do as well, as I always like to cover a little bit of a strategy in a bit of detail. And then after we've done that, one of the live trading strategies and Q&A, and then we'll go. So we should finish for about 8:30, and I know there's some technical hitches here and there. So I have to be out of here by 9 because I need to get to the gym, so my apologies for that, but I'm going to shoot at 9. So we'll get everything finished off before then, so don't worry, okay? So we'll then kick off, I'll talk a little bit about risk management. So what does everyone remember about risk management from the course?
We should risk 1%.
That's a very good place to start, right? So we should always risk 1% of our account. Okay, brilliant. And let's have one of the advanced. Here we go, Jacqueline. How do we work out 1% of our account if we're going to risk that on a trade? Oh dear. Okay. So Jacqueline's not one of my advanced. Okay, so just to. Do you remember Christina?
Pregnancy brain. I didn't. I forgot to study.
Okay, no problem.
But
does anyone remember? Abel?
I haven't used it yet. We've got a calculator from
Yes, there is indeed, exactly. Okay, very good. So, before we even get to the calculator, one step before that, a little bit of theory rather than anything. Just remember, when we're risking 1% of our account, we always want to, let's say, for example, I may need one of you to get the door for me. Master your markets. Hey, B, how you doing? This telephone conversation is being broadcast live to the whole world.
Nice.
Yeah.
So people on this chat right now.
Let you in?
Do
All right. Okay. I will see you in a bit.
you
All right.
Bye.
She's someone's lettering.
You don't want to be famous?
Thank you, sir.
Says you should.
Okay.
So when we're trading, we always want to risk 1% of our account. Now, the way that we do that is, let's say we have an account value. So let's say, for example, I'm just going to pull some numbers now. So let's say, for example, we're starting with an account and it's got maybe £20,000 in it, and that's our trading capital, right? Now, one thing I want to remember with a trading account is that when you put money in, it just functions the same as a current account, okay? So the same functions the same as a current account, which means you can put money in, you can take money out, there's no cost to do that, right? So that's always there. Hello. Hi, please take a seat. It functions the same as a current account. You can take money out and put money in. There's no cost to do that. So There's nothing wrong with putting money into trading account because you do get capital in order to be able to place trades. Okay. So when we're risking 1% of our trading account, we have a formula to be able to help us work out what we call our position size, right? Now, first of all, 1% of our account can be calculated very easily by just multiplying 20,000 by 1%. Okay, and what would that give us? £200. So we know that on any given trade at this stage, we will not risk more than £200 on trade. Okay, it is not possible for us to risk more than £200 on trade if we use the formula and the mechanics which we're going to be showing you just here.
For
Okay?
some reason I thought it was more complicated than this.
Oh, absolutely, it is, but I'm just making it a little more simpler in the beginning before I introduce the layer of complexity. But don't worry, we're going to break it down really nicely. So £200, don't risk more than £200 on trade. Okay. So what we can do now is just understand our position size formula. So position size formula. Okay. Now the position size formula is actually very easy. It's just the way that we apply it is a little more complex, right? But actually, to be honest, with methods very easy once you've done it enough times. Okay. So here's what we're going to do. Position size formula, very simple. So we just say our account size. Does everyone remember this formula?
Yes,
This is the one I got horribly wrong and lost the prize on, isn't it?
I think no. I think there's something else.
Is it a different one?
Remember? Steve, do you remember what it was?
Yes, it's account by multiplied by 1%.
By
Divided by entry minus stop loss.
Very good. Right, here we go.
all of a sudden you remember this. I wonder what triggered that.
This is not last. Okay. Okay, there you go. And of course, B over here is one of the most advanced people that we have on board. Very lucky to have a lovely lady, actually. So if you get a chance to please connect with her. In fact, maybe B, you should introduce yourself because they all introduce themselves.
Okay. I don't know what kind of introduction.
Name what you're doing, how much you've been trading. It helps.
Okay. Yeah, thanks. My name is Beata. I'm trading from the beginning of February. By profession, I'm a civil engineer.
This February.
This February.
We're all newbies.
Yes.
Okay, good. So, apart from England, who's a general,
Please, I'm starting out fresh. Please grab off all the experience I have. I learned the wrong way, so I want to write.
Yeah, no problem. That's hey, we've got to get the. Thank you very much. Mind why Right. Okay, so risk management. That was our formula just there. So what we'll do, why don't we take a real trade from the journal and just apply this formula to it? Yeah? So as I said to these guys at the beginning, I think you just missed the beginning, we're just going over risk management, and then we're going to apply some of this to real market, and then we're going to go to dynamic breakout, and then we're going to do some Q&A. Okay? Fantastic. So let's apply some of this to what we're looking at here at the moment. So why don't we pull up our journal? And there we go. Okay, so this is perfect because looking at the lift-off strategy, there is actually a pending order as of today to place the pound against the dollar. So here we go, lift-off, $1. There we go. Right. Can everyone identify the lift-off setup? Yeah. Yeah. Christina? Just to hear back. You will need to come through this space. Alright. And we're going to here. Yeah, there's coming through here, but you need to put this wide as this side. Take your time, there's no rush. Okay, so can I identify the setup here? Yeah,
You need the confirmation, the basic setup.
that's right. You need the setup bar and the confirmation bar, and the order of moving average to be correct, right?
So if someone closed below the blue one.
Yeah, do we have a close below the blue one?
Yes, we have one. So just before the end. Yeah, this
That one?
Yeah.
Yeah, okay, good. Close below, very good.
And the confirmation one is
Yeah.
the one that closed above.
Yeah, which is
So
what
that's
day?
the last one.
the last one, which is today. So this is today. As of right now, of course, we see the closing of lift-off strategy on the pound dollar. Okay, great. So what we can do is we can position size this, right?
I have a question.
Yes.
You identified Taliban as the first bar that we're looking at.
Indeed.
But we had just yesterday, we have a joint set that was like
I can't dispute that at all. You're absolutely correct. No. Why wouldn't I take the last one? Because these are all broken down into different variations on my proof sheet.
Yeah.
So really, generally speaking, for the lift-off strategy, what we look for is the first close to go below, and then we look, actually, ideally for us, is immediate close above. See, we call that variation 1A, right? That's lift-off strategy variation 1A. Now, if that doesn't happen, we can wait for a maximum of 10 bars to also close below before we get a close above. And in this case, that's what's happened. So we've had 1, 2, 3, 4 bars that have closed below before we've got a close above, right, after the initial close below. So that's variation 1B, and that's also okay.
So whatever we choose as our setup bar.
Yeah, it's fine. Yeah, within reason. I mean, we've got some rules around this. Yeah. So you're right. You can look at that one as well.
You can take that one, 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 or that one.
You can, indeed. But we look at the first close below.
The first one.
Yeah, the first close below. But you're right.
Or the furthest.
Yeah, that's right. Correct. So even if we were to look back, even if we were to kind of go back like this, and let's say we would stage it day by day, then what would happen is we'd say, right, do we have a close below yet? No, not yet. What about now? Yeah. What about now? Okay. First bar, it's closed below. Now we're looking for a close above. If we continue to get closes below, they're of no use to us because they don't confirm for us the change in direction. Yeah.
Does not have an effect on the momentum.
What do you want to affect on the momentum? What's that?
Then you have the momentum going up, so now the price was below the moving averages, and it's now like on the way up. So it's
the momentum is confirmed for us. Well, in terms of lift-off strategy, momentum is confirmed with the close above, because that shows, now buyers coming back into our market, which is what we look for. But in terms of does it affect momentum if the bar is historically closed below? Ideally, of course, I think if we can get, it's actually better if we can get a close below the several bars than a close above. Because actually what's happening there is something called accumulation. Market makers are stacking orders. What I'll do is I'll send you a YouTube link, you should look at it. It's by a gentleman called Martin Cole. He runs a training business called Learn to Trade. It's really good material. It talks about 3 phases of market manipulation. So he talks about how market makers, who are basically people in the market who control big money, they accumulate orders first of all, so the market moves sideways, then they manipulate the market to make it look like it's going a certain way, and then there's a profit in this phase, absolutely. So I'll send you that, I'll send you all of those videos. If you get some time, have a look at it. It's a bit advanced, right? But certainly have a look at it, it's going to explain a lot to you in terms of why we're looking for those bars in between. And actually it was on his, methodology to get you built this.
what's his name?
Martin Cole. It's Martin Cole and phases of market manipulation. If I forget to send the videos, please. Okay. So we have today a close above. So how do we now position sizes? Remember. So let's say, for example, we have, here's our data window, which gives us the statistics on our different bars, and that's the statistic on the latest bar. So how do we remember, guys, you need especially how to position size this, so we can take the trade? Do you guys remember?
I think so. Target minus, target minus.
Can we just click on the right page
No.
before we start?
No.
Or, okay.
Target minus stop loss, and then divided by entry minus stop loss.
Okay, that's going to tell you your water risk, right? Your water risk is going to tell you.
So that's not it.
That's part of it. But before we can do that, we need to know where is our entry, right?
Right.
It is correct, but let's just do it later on down the line. So that's maybe step 2. Well, step 1 is maybe identifying entry and stop loss.
Yeah.
Yeah, so the entry is the, so this is So,
certain number of pips above the confirmation bar.
Certain number of pips. Yes, that's right.
so we're going, in this instance, we're going wrong, right?
Correct.
Okay. So then the bottom of the confirmation bar, the low of the confirmation bar,
Would be
is
our-
our entry,
Okay.
and so the entry, okay? Yes, and the high of the confirmation bar will be 5 pips above our confirmation.
Okay.
It will be our
Does anyone elaborate a little bit more? Yeah.
Shouldn't the entry point be below of the confirmation bar, which is like,
The lower the confirmation bar.
yeah. And then stop, sorry. Entry point should be the upper of the entry, the top part, and then the stopper should be the low of the confirmation bar.
Right.
Yeah.
Okay,
So it
so
should
we're
be,
around, which you said, yeah.
yeah, there's it. The green bar that we have at the bottom, the one that is on today,
Yeah.
negative.
Yeah.
So the low, 1.680, is it?
Yeah.
That should be-
1.601.
Yeah, 01, that should be the stop loss.
Okay, so
Yeah.
I think the low -1 would be our stop loss. So in this case, 1.6800. Yeah, because the low is 1.6801. Does that make sense to everyone? Yeah. And where would the entry be?
Entry will be the high point, 1.686, plus 5, 1.3.
Plus 3.
Yeah.
1.6863 is the high. The high is 1.6863. So where would be the aim? Perhaps
7-1
1.
plus 3, right?
Yeah. You've got to ignore the fifth decimal place, which comes with time. 6863 is what we're looking at. Plus
6.
plus 3 will add.
Six.
Ignore the last decimal place.
Right.
We've got 1.6863.
Yeah.
So to which we need to add 3.
Okay, 6.
66, yes. So 1.6866 is what our entry would be just there. So now we've identified, our entry and our stop. Now we can reward risk it. Right. Cool. Okay, so that's good. Now the reward risk, I'm going to save you a little bit of time now because all of our reward risk is 2 to 1. Yeah. So yeah, 2 to 1. Basically, for this is given for our liftoff and for the dynamic breakout, the reward risk is 2 to 1. So if we have 66 pips of risk, here, how many pips of target?
66 times 2.
66 times 2. Exactly. Yeah, so this is 66, so this will be 66 times 2, which is 130. Perfect. Great. Okay, does that make sense to everyone so far? Very simple, right? Very straight. Okay. So, are you guys okay with this? Because we don't do the newbies, so for you not to be okay is okay.
Yeah.
Yeah. Brilliant.
Let's go.
Okay. It's a bit difficult. It's straightforward. Yeah. Okay. So here it is on my journal. So for 1.6 and 9 for a stop, and the target is just going to be a 2 to 1. So it's just double the number of pips there. So the target is going to be 1.6918. So just double 1.7, which is a really good place to have a target. Right, so 1.67. Okay. So oops. Okay, now what we're going to do real quick here is we're going to position size this up. Now, for position size, what I want you guys to remember is we have an online calculator. Okay, so I need to use an online calculator. The online calculator is called. That's all right. So no matter what you do, sir, I'm going to show you the online calculator. I'm going to do it. I'm going to do it. No worries. Okay, so the online calculator is by a website called EarnForex, right?
Yeah.
And it basically allows you to calculate what your position size on a trade during a stick.
And for it?
EarnForex, yes. Forex position size.
Position size.
Rishi, a couple of questions.
Yes. Hello, Rishi speaking. Gary, hello. Gary, you know what? I want to talk to you, but I want to connect with you. It's just I'm leading a session with 600 people and online and web. And so I'm glad I picked up your call because I'm calling online. Is that okay?
Oh, that's fine.
Top man, I'll speak to you then. Take care.
With your pleasure.
No, no,
Yeah.
Right.
Good.
Okay, so,
Can I ask you a question, Rishi?
yes.
So you said to ignore the 2 decimal points.
Fifth decimal point, I think, yeah.
Fifth decimal point.
Ignore the fifth decimal.
Okay.
Yeah, brilliant. Okay, so the website is called Earn Forex Position Size. So Forex Position. Yes, there it is. So when that projector does come back up, and I'll keep it. So what we're going to do today is going to ask us for some variables. Right? So variables such as our account size. What percentage of your account you want to risk? Right? How many pips do you want to risk? Other bits like that. Okay. So see, you know what would be much more interesting, right, Jacqueline? Would be see, because I know this stuff inside out. I do it, right? You know, everyone's development and growth, right? As B has experienced in the past, right? Would be if you lead this, right? Would you like to do that?
It's my first time.
You can
You
do
know
it.
this stuff,
You
right?
can do it.
Or you, okay, cool. You chill, I'm gonna lead. Okay, so
I'll try to fill in the menus.
okay, cool. Okay, position size calculator, right? But the thing is, it's more fun when you don't know stuff, right? Because then you know it's fun for me at least.
You can laugh.
Right. Okay. So okay, cool. So next time, maybe if you want to, I'll give you a module in advance, and then you can read up about it and you can read it. And then that will give you a little bit of.
Sure.
Believe me, the reason I say that is because your growth is huge when you're doing stuff and you're not quite 100% sure. You're going to learn tons.
Let's say when you teach, you learn twice.
Exactly. So here's our position size calculator, and all we need to do to it is we put our variables. Now let's say this is a pound account, right? So I of course have to change this from US dollars to pounds because my account currency is pounds. So here it says account size. So of course I'm putting my account size here. For my example, £20,000. So it's going to say to me, what is your risk ratio, percentage of our account do we want to risk on this trade? £1,000, right? That's what we want to risk here on this trade. So then, what is our stop loss standard pips? So how many pips are we risking on the trade? Can you remember? This 66, right? Does it make sense?
Yeah.
I go too fast.
No?
No? I go too fast?
So how did we come to the conclusion of 66?
Yeah, 66 because we said that the
Oh, we
stop
just
loss.
make the calculation of reward and risk.
We didn't do that. We did what you said earlier, which was entry minus stop loss, which was here entry 1.6866
Okay.
minus the stop loss. That's the number of pips that we're risking, right? So let's look at it on the graph again. It will make more sense. There we go. So you can see, we zoom in a little. There we go. So our entry is there, 1.6866. There is in yellow.
Yeah.
And our stop loss is just here, 1.6800. So the distance between the two is asking us for that. How many pips of risk are there? Does that make sense?
Yeah.
Yeah?
Yes.
Brilliant. So 1.68, 66 entry, 1.6800 stop loss, 66 pips of risk within that. So of course what I do is I just key that into my online calculator. Currency pair. Just me, which currency pair are you trading? Right? Pound dollar, right? Exactly, yes, thank you. So when I key that into here, so GBP USD, you'll find that in the drop down box. It's going to say to you the GBP USD ask price. Okay. Very, very easy piece of information to find. So here all we do is we click over to its market watch window, which is toggle on and off. It's this third button just here. And under here, we list most of our currencies and tells us the bid and the ask price, i.e. the best prices we can buy for, best prices we can sell for. So current ask price on the GBP USD 1.6839. 6839 is the current ask price. I'm going to key that in here, 1.6839. And once I have entered all of the information that is asked for, I'm just going to calculate, and it's going to calculate for me at the bottom there how many lots I should put on the trade. Okay. Now, lots, very simple. Okay. I think Terry covered this a few weeks back in the direct market access and spread betting section, right? So a lot, one lot equals $10 per pip. Does that make sense?
Mm-hmm.
Every pip we increment, you get $10. Every pip it goes down, you lose $10. Really, really simple. Okay? So to put $10 per pip is one lot. So here it says 0.51 lots. Yeah, can everyone see that at the bottom there? So it's telling me that my position size, according to the online calculator, is 0.51 lots. So now, if we know that 0.5 lots, let's say for example, and we know that one lot is $10 per pip, logically, how much in moving 0.5 lots is?
£5.10.
$5 per pip, yeah. $5 here per pip. So lots, generally, they're measured in dollars. So basically, all this is telling us is roughly we're placing a trade of £2 per pip, something like that, right? Because it's $5. Does that make sense?
Yes.
Everyone's got that? Yeah. If actually we work the whole trade out using our position sizing formula now, we should be able to see something quite similar. So actually, you don't actually need the online calculator to be honest, because you can use both. It really, I just want to show you two options. Yeah. You can use the calculator. If you're like me, and like thinking that I'm actually just yeah. Right. So here we go. Account size times 1%, 200 divided by what's the entry? 1.6866 take away 1.6800 equals how much?
66.
Okay, so what would be the answer to this? Anyone tell me? Who's got a calculator? Got a calculator? Three point.
0.30.
Yeah. And actually, if you work out $5 in pounds, it's going to be something very similar, right?
Okay.
Yeah. I'm not sure. 1.6. I think the calculation is there. If you work it out, it should be very, very
So
similar.
once you've got the dollar amount, you
Yeah.
convert that to GBP. Yeah.
Yeah, that's it. But you don't even need to do that really. I mean, because MetaTrader will do the calculations for you. If you put in 0.51 lots in MetaTrader, you're cool.
Oh, okay.
Yeah. It's like, because it's asked us already at the top where our account currency is. It's taking that all
Yes.
into account.
You
Yeah.
know that risk ratio percentage, do you always put that as 1 or does
Yes.
it matter? Or?
Yes, no, because it's after you compare the percentage of the national sometimes the risk is 0.5%, depending on what things are happening with that particular trade. So sometimes we just put 0.5 there, which means we're only risk $100 out of the $200 we have paid. Just being a little more conservative.
That's a question. If I have a currency account of like pounds, and my currency pair that I want to buy is going to be dollar yen,
Yep.
do I have to change, so I have to factor into the point that pound change to dollar before I actually can buy the currency pair for dollar?
This calculator, I'm pretty sure, actually, if you don't use the calculator, yeah. If you don't use the calculator, the only thing that you need to do is just cross-convert your dollars at the end back to lots, and it will work. But the dollars back to pounds, your position size will work fine. Okay. So all you would need to do in that case is do the calculation using this formula just here, and then that will probably give you, as long as you've used pounds here,
Yeah.
that will tell you how many pounds per point you have to put on the trade.
Yeah.
So let's say, for example, really easy, it will tell you £1.50. That means $2 in 2 lots, and that will.
Okay.
Yeah, so it's just the other way around. Yeah. Okay, so calculation done on this side, 0.51. Trade risk managed according to our criteria. Next, its final step really is just to place the order. Right. So just to very quickly do the order placing, the switch will begin. So we'll show you guys how to actually put the order on. Okay. Now,
Just where you go out and have a coffee and let the YouTube video do this work.
indeed. Okay, so just in case you're missing any of this, remember that I've got tons of stuff online and we've done everything like those times before. But this is 232 years. Okay, I just made this for you guys actually, so that's cool. That's what I think you're looking at. So this is me going over it. So there's just stuff online. So I can send this out to you. It's in the Dropbox folder and never gets out to you review it. Okay, and even placing order, I mean, I'm going to go over it just here, I believe. There we go, you see there's me placing the order. There you go. So this is what we're going to do next, we just can place this, but this will really give you an overview on how we actually did it, yeah? So don't worry about it if you miss it, you will recap instead. So let's place our lift-off strategy for £1. Okay. So here we go. Real quick, real easy. Just press new order right at the top. Okay. Yeah. And if you feel free to follow along as well if you would so like. Yeah.
Are we placing it now?
We can do that.
Yes, we do that.
This will work. Maybe we should place it. Wait,
Just in case.
after the US, I would say. Yeah.
So that's post 9 PM.
Yeah, it's just a little safer. So maybe it's a good point. US markets is over, so there should still be some.
End of day trade. Yeah.
There should still be some movement in the market towards those hours. So
Yeah.
Very crude.
Very experienced when we're talking about who's most experienced around the table.
There you go.
okay, here we go. So what we're going to do is we are going to place this trade, and we're going to first thing we do in this trade placing situation is we change type from market execution to penny order. Okay. Now market execution is basically you want to trade the market there and then at that current price. Like you want to enter or buy, you want to enter or press sell, right? We'll do it there and then. Okay. So that's the market execution. Now pending order is if you're telling the broker, look, this broker, when the price is currently down here, but when it reaches up here, that's when I want to get into the market. And right now it's just doing. Suddenly if it does that and it will work or something, and then so we're going to be placing a pending order, one of those ones where prices are there. Okay. So remember we're placing it around these yellow lines just here. And what I'm going to do, I'm going to remove these so you can actually see the order going on. So the first thing I'm going to do is I'm going to type in the volume. So remember it told me on the calculator just at the bottom there, it told me 0.51 lots. So I'm going to place that 0.51. I'm going to change the type to a buy stop. Okay? Change the type to a buy stop. So buy stop, right? Anytime I want to go long, I place a buy stop. Right? So this type of trade is going to be a buy stop.
Right.
So if I'm going long, if I'm buying, it will be a buy stop. If on the other hand I'm going short, I'm selling, it's going to be a what?
Sell
stop. Right, that's it. So this is a buy stop. And at price, I'm using a key in the entry level. Now remember the entry level was 1.6866. Yeah, and key that in. 1.6866. Okay. And the stop loss, right, is 1.6800. And the take profit is, well, the take profit the journal will calculate for us. The take profit is the top. Yeah. The journal will calculate for us automatically, and it's 1.6998. So that's just basically for us there. These calculations the journal takes care of automatically for us. All I do is put in the entry here, so 1.68, let's say 60, and see according to that the target will be calculated. So it will be 2 times
Good formulas for sheet.
Yeah, they're in there.
Formulas.
It's good for people who don't think that much and like me.
Yeah.
I did. Okay. So, yeah.
The target is we need.
Yes.
Can we believe it? Because if it doesn't break it, then we can do
Indeed, we can do. You're absolutely right. Yeah.
Yeah.
I mean, I'll basically 2R. I understand exactly what you're saying. I think we'll be safe because it's 1.7. It's below 1.7, which is a good number to base your targets. Because I think there'll be a lot of sell orders at 1.7.
Okay.
So I think if we place our sell order just below 1.7, we're safe.
Okay.
Yeah. So it's a great question. So question coming through. Question coming through about the target. You see, the target we're actually placing a 1.6998. Okay. So the target we're actually placing here, 1.69.
Exclusive. All right.
1.6998. Okay, that's where our target is going. Okay. Now, Sophia's question is a very good one. You see, the market hasn't reached 1.6998. Actually, if you look back at the pound dollar, quite interestingly, these are 4 or 5 year highs. The pound against the US dollar.
Really?
Okay, yeah. So it's very interesting. So very good time to go shopping in the States, by the way. So
Right.
I'm planning a long weekend in New York. This is a good time to do it. So 1.6998 is. So you're saying, why do we put our target just a little bit below, just in case the market doesn't touch there? See, it's a good question. You see, the answer is actually that the market will, I imagine, if the market does climb to that distance, first of all, I don't think we'll have a problem getting up to 1.7, right? Now, 1.7 is what they call a big number, okay? So it's a big number because it's a very round number, and psychologically, people think, 1.7, good time to sell, right? So if we're holding position at where we were entering 1.6866, and we're getting up towards 1.70. If we have a target just below there, I have a feeling that there'll be a bunch of sell orders stacked there. Yeah. So if we can get up there, then our order will be very easily filled. Yeah. So 1.7 is a good number to just below that. Have our order place relatively a lot of sell orders. A lot of people will be thinking good time, and you'll see it naturally. Even if you watch it on an intraday basis, as if you watch a 5-minute chart in the lead up to that 1.7, I guarantee you that the market will reach that level and it will turn around or it will drop quite suddenly, for quite a distance, and more distance, quite distance, because psychologically there'll be sell orders placed there. We'll want to offer that position. 1.7, it's a good price to sell at. So if it's a good price to sell out, we also want to sell that. We're just below. So our target is 1.69. I hope it answers the question. Okay. So 1.6998. Okay. So you see that is everything done. And then actually what I need to do once I've placed my at price, my entry here, my stop loss, and my take profit is just press on sell. And what you'll see will happen is we'll get that box disappearing, and it will show you the lines on the chart as to exactly where your entry is between your stop losses and your target. Yeah, that information will be put there for you. Okay. Right. Now I am.
How long do you imagine that you'll be in this trade in total?
Fantastic question. It could be anything in between. We've seen trades where we've just been in one day and it's hit our 2% target. We've seen trades where we've been in 15, 20 days and it's hit our stop. Right, we've had that recently. So anything between a day and 20 days, I imagine this is going to be more than likely. You're going to be anything more than that.
With lift up, it's worth to say lift up it's kind of quite dynamic, so it's normally short term.
Yeah.
Dynamic breakouts opposed to longer.
Longer, absolutely. I think that's fair. Okay, so that's that order just there. That's placed, and that's how we go about the mechanics. So actually, first of all, risk managing a trade, and then actually going from risk managing to actually looking on a chart, on a real life example, and then actually looking at the position size calculator, and then using that to place the order as well. Okay, so are there any questions around what we've covered so far? Pretty cool. Okay, so maybe what we do is we do one more, right? And maybe someone else wants to take the lead. Someone else wants to take the lead.
Can I ask you,
Go on.
since we were buying, did we have this spread?
It's a good question. Yes, we did add the spread because we added 3 pips to the market.
No, I mean, I'm still.
So instead of adding just 1 pip, we've added 3 to come spread plus. Yeah, okay, good. So, right, okay, go to one more example, and let's find one more. We didn't learn anything, absolutely correct, so very fluent. 1 point. Okay, Aussie. So we're going to place this trade here. Okay. So this is an order that we've had actually for a month now. That's just been resting to open and hasn't triggered as of yet. In fact, I don't imagine it will anytime soon as well. Let's have a quick look at it. Let's just. Let's switch over to dynamic break. Another trade. There it is. And Aussie dollar. Okay. Now, what we have on the Aussie dollar, I want to talk a little bit about this, is a dynamic breakout. Now, Jacqueline, do you happen to know which variation of dynamic breakout this is? Just here. To go short. So our entry level will be here.
Yeah.
Yeah, you know which one this is? Okay, no problem. B. Okay, B. Have a guess.
Memorize them.
Have a guess.
What's the question?
We have 6 dynamic variations of the dynamic breakout strategy.
Okay.
6 variations. And the question is, I just wonder if these guys have. Probably not, but just what you get.
Is it the one that,
Bouncing. That's the bouncing one.
Most.
is it the one that breaks suddenly?
No, it's not. No, it's not bouncing. He's just putting the leg, and everyone else as well. Right. Okay. So, good. Okay, we'll call with this. So what I'm doing, I'm raise this. I'm going to quickly just talk about the first 2 variations of the dynamic breakout. No. Okay.
Everyone beat.
It's worth having a guess. It's not full. Just shout out random numbers, you will get it.
Yeah.
5.
It's read the crib sheet and you could watch it.
It's so true.
No, 5 cannot be because.
Isn't this very structural phase?
Ooh.
Yeah.
It's
Well, it's like psychology. It's not a price structure.
Single market compression?
It is a single market compression. Very good. It
Well
is.
done.
Very good. Okay. So,
Is it?
it is, yes. It's very well spotted. So if we look at this range from this low point up to this high point just here. In fact, if I map the whole thing out from let's just map it out from. I wish we could cover this somehow, but I can't. We can do this. So, there we go. Right. Okay. If we just look at the whole thing from there. So right at the bottom we have a low. Okay. We have a low. And up there we have a high. Then we have a what? Here. Very good. Okay, high low. Okay. And then we have a
Low, high.
correct, yeah. Low and high. This is a high. So what's happened here is if we look from this point here to this point here. This is the distance from low to high. That's all I'm saying, right? Distance from low to high. Right. Does that make sense?
Yeah.
And then I'm going to do this one here as well. Do higher low to lower high. Just here. There you go. There's the distance from lower high to. What I'm saying here, and this is the theory, is this is what we call a single market compression. The reason that it's called single market compression is because this range is within this last range. Okay? So basically that means that the market here is compressed. Right? And a market that compresses generally tends to expand. Exactly. So what we expect is something like this. Comes down to here. So on this would be our entry point on the break of this lower higher low. And our stop would be above the high of the bar. Makes that smaller. The stop would be above the high of this bar. Does that make sense? Yeah. Good. So, right. Okay, so that's the pending order that we're going to place now. Interestingly, the statistics say that if the market makes a lower high as here on this board, then there is a 70% chance, right, that we're going to break this low before we break this high. Yeah, 70% chance. And you see this one's going for it. I don't know if it'll break, right? But the statistics say there's a 70% chance. So ideally, we'd like to place an order to open here, and we call this a variation 2 dynamic breaking. Yeah? And all of these variations are actually broken down on the crib sheet, which is available in Dropbox. So I will just reiterate what that is. LTR, LTR. So getting started, and under some strategies and breakout, crib sheet, and trend variations. You experiment a little bit with Dropbox, you'll find everything. Dynamic breakout variations, and then of course there are two types of variation: trend defined and trend established. And then variation 1 we have what we were looking at was there. Variation 2, which is a single market compression. So what we're going to do, taking all of that aside for a moment, we are, yes?
Where did we place that pending order?
Yes.
When did we place it? You could show
Yes, let's have a
us.
look. Actually, it'll be quite some time back. This is the long. That's the long. That's the long.
Yeah.
Underneath. We took the short off?
Take a shot.
Okay. Let's put the short back. We need the short. Just make it original. This round. Okay, that's what we want. Aussie. 20th. So the date as of the 20th of the 5th, 2014. But to answer your question, Jacqueline, when do we put that order on? When we should have put it on when we had that smaller form. It should basically be on the 6th of May. It should be going on. So it would have been on for 14 days. Yeah, 6th of May. So that's pending long as of today, 20th of May, and it's short. Holding. Put this into red. Okay, so it's a variation 2, and you will understand why it's a variation 2. And we're going to put anything that's not a variation 4, breakup, is much reliable variation from Bill. We put it at 0.5% risk. So we don't risk up the entire $200 or £200. What we do, in fact, is we just can go ahead and place half. It's absolutely correct. Yeah. Does that make sense to everyone? Just going to squeeze past it. Cool. We're only going to place 0.5% on that one. So that's pretty important to note. Okay, so once we have, it's going to be a disaster.
How easy is it to upload all of that on?
It's automatic, my friend. It will happen straight after.
Wow!
Yeah. We like automation.
You really thought about everything, huh?
Why do we do
Time efficiency.
I'm working with the best.
When we do 25%, is it because we are so we're not as certain on variation 2 as we would be variation 1.
It's not, I think it's not that we're not as certain. I think it's more that it's the reliability. Yeah. When we and this is the reason we have to know all of the variations as well. It's really important if you put in your journal, you should write down your entry reasons, right? So this is when, and you were saying that you wanted to modify different targets and entries, things like that, which is fine. But again, you know your reasons for doing that, because then we can go back and look at it historically and see its performance. Okay, so being able to do that, because we're knowing down that things, so we'll be able to see variation four is the most reliable. In terms of, okay, if I put 10 variation four trades on, 7 of them will give me a really good result. Okay, as opposed, I don't know the statistics. I don't, I need to go back and check, but I know that just looking at it visually, but I've got all the data, so I can quickly generate it. Variation 2, variation 1, still good, not as reliable, so I like to risk just a 0.5%. And again, it doesn't matter if you don't do that, it doesn't matter if you risk a percent, it's totally fine. The main thing that I would say is that because we've had loads of winning variation 1s and 2s this year, the main thing that I would say is that we need to be consistent with the risk lever. So if you put on 1% risk in variation 2 once, you should do it on a recurring basis. It's not just sometimes, because then you lose that consistency. That's very important.
Question, basic question. Where do I find this spreadsheet? In Dropbox?
Yes, that's a fantastic question. So it's if you look under the Dropbox folder, under LTM Group Program, and then there's a folder called LTR, and then there's a folder called LTM Journals for every day. And under there, you'll see the 2014 journal that we're able to open that up just there. So just going back to our break just there. So on the Aussie dollar, let me just check here very quickly. Just check here very quickly. What are the moving averages? Okay, so you can see on the Aussie dollar, the 20 moving average is above the 50 and 100. Just like to make a note of that. Again, just log into my entry reasons so that I can just see what works better longer term. So 20 above 50 and 100 EMA. Okay, so variation 2, 0.5% risk. 20 is above the 50 and 100. Okay. That's done, and then what I'm going to put in is my entry level. Okay, now on the dynamic breakout, the entry is going to go on the low of this bar that makes the swing low. Okay. You guys cool with that? Yes.
Why did they have to put the 20 in the reasoning inside as well? Because like, isn't that kind of different from when we go short?
Yeah. Again, it's just so I can visually see when I go back and look that, generally speaking, the variation falls where the 20 is above the 50 or 20 is in the right level for liftoff, as well as dynamic breakout, works better than when it's not in the right level. It just helps me to hit it. And if you put more parameters on, maybe you can put some indicators and put those on as well, I mean, even better, right? I mean, I'd really love to see, like, the RSI, you know, stochastic oversold as well. Maybe that works even better, right? I mean, there's so many permutations, but the more data we can collect, the more information we have in order to see how consistently we're working. Yeah, it's possible that 90% of all the trades where the stochastic is oversold and we're looking for a long, a variation 4 work well. And then we know that, you know, if we're not looking at oversold stochastic, we're looking for a long, we're only going to take 0.5% risk. But if all factors line up, we'll go for the full 1%. Does it make sense? Yeah. Everything just comes down to having a high reliability strategy, right? Making your strategy more and more and more and more reliable.
This is just like double checking.
It's not double checking, but it's more like
sort of building like
yeah,
whole research base.
Definitely, 100%. That's the whole key. Yeah, perfect. So so that's there. So the entry level is going to be just below this low of this bar just here where this yellow line is. I'm just going to check exactly where it is, and it's going to be 0.92. 0.1 is the low, so my entry will be 0.9200. 1 pip minus. And 9200. and my stop loss would be 3 pips above the high. High is 9279. So if my high is 9279, let's see, let's do this. Okay, we get 9279. Variation 2, yeah. Okay, so the entry is again going to be 92 entry equals 0.9200, and the stop equals 0.9.
7,
Say that again, sir. Yes, you're right, absolutely. 9279 plus 3, so 9282. Everyone got that? 3 pips. So for the spreads. Yeah. So that's my entry and stop. Yeah. So I'm going to put that into the journal. You can see the journal works out all the reward, risk, and stuff for me. I'll show you right now. So if I just put, if you watch these blue columns in the journal, means don't touch anything because there's formulas there. Yeah. So if I just key in my stop now, just say 9282. There you go. You can see it's worked out my target for me. It's told me how many pips of risk there are as well, and how many pips do I get to my target. Does that make sense? Yeah. So my target is 928. My target is 0.9036. Okay. So what I can do now is I can take all of these figures and move back towards my position size calculator. I'll just clear that data, and I can just go ahead and key that stuff in again. So let's say account currency again, GBP. Account size, doing the same. What percentage of my account I'm going to risk is going to be 0.5%. A different trade, different strategy, and different variation of strategy. So, and my stop loss is standard pips, and that was 82, exactly. 82. And the currency I'm trading this time is a different one, which is the Aussie dollar. Yeah. So you can see how, once you get the hang of it, how quick it is. Yeah. I mean, these guys are speak to them over and in a few months. So it's severe. So once you just get a little feel for it, it comes through. So GBP USD and 1.16840. 1.16840 is the
Are you looking at that?
The ask price. It's asking me over here.
You're looking at the wrong currency.
GBP USD ask price. Yeah, because it's got to translate it back to dollars. And it's lots of calculating dollars it wants to be asked.
So you always look for that GBP USD.
It's going to give you different currencies based on what you're trading. If you're trading something else, then it'll ask you, there you go. See? It will change as and when you trade to different things. So just be sure to make sure you know exactly what you're onto that. So GBP is asked 60.
That fluctuates, right?
It does indeed, yeah. So you just get the closest number as of now. 40. Calculate. And if you look below, told you this time 0.2 loss. So based on that, if you know that one loss equals $10 and 0.2, Christina, B.
No, sorry.
$2 per lot.
Yeah. So $2 per pip, which is going to be like £1.66 or something like that, right? So again, you can use the position size formula, or you can get this really make.
That's 0.20.
0.20, correct? Same thing. Yeah. So 1.2 is $2 per pip, which is about £1.66. Again, here, if I look at the 20,000 pounds of risk, 200 divided by 82. So I want to get Yeah. That's right. Okay. So that is $2. All my friends left me from all this stuff. I was a woman, I'd be able to do this. I can drop one at the same time. Right, okay, so this has already done the dollar conversion for you, that's what it is here. 0.2, you don't actually need to convert it back, it's actually telling you 20. It's actually telling you 2 back here. So if you look, if you do the normal calculation as it is, it gives you £2.40 here. £2.40. If you do the calculation here, it's giving you 2. This is actually already telling you that that's 2.00 basically. It's 2.
You know that 200 divided by 82, is that the risk?
It's risk. Yeah.
But is that the formula for the reward risk, or is that something different?
Is that the formula for the reward risk? No.
That's not it.
No. This is just calculating this minus this.
Oh, okay.
This minus this. It's giving you 82.
Okay.
This is telling you £2.40 of his £2, rounding down a little bit.
Okay.
And this doesn't take into account the current ask price as well. It's more accurate to use the calculator because the calculator takes into account the ask price, basically, is what's happening here.
Right.
And I'm just using an arbitrary figure of $100, which is wrong. Yeah. In a nutshell, I'm making up my own exchange rate, which you shouldn't do. Which is pretty cool. Okay, so, right. So, here, 1. 0.20. So I'm going to change this to pending order.
Change the volume.
Yes, indeed. So now I'm going to change it. Yeah. I'm going to change this. This time we're selling, right? So which drop down should we use? Yeah. And the price is going to be 1.920 is going to be our entry into it. And the stop loss, we've already written, that's going to be 0.9282. And the take profit is going to be calculated on 0.9036. So that's what I do, 9036, and then I just place, and that is going to be placed by order form. And that's fully position-sized. That's my entry just there. Stop loss. Remove these lines, right? We'll see what most traders put in. And then that's it, we're good to go. And then when that trade is real trade, the stop loss will be done. But that is a variation to that no breakout because the range is within the previous range. It's a compression. And so we expect that's to the downside because it's on the lower.
I want to add something here. When you are playing with the graphs, when you're putting the trades and you're playing with the graphs, and you, for example, you want to make that column or something, then it's quite easy to pick up when you pick up that line by mistake and move it.
Oh yes.
That's what's going to be your trade is changed.
Indeed. So
Can you demonstrate?
absolutely yes we can. So and I've experienced it many a time.
Yes.
So I'm pretty sure there's a way of switching it off. I just haven't looked into it. Right?
So I did catch that.
Yeah. So what B is saying is basically sometimes when you're drawing your own lines on the chart, and you want to sometimes you accidentally grab like another line you're not meant to, and you would grab it, you would drop it, your whole trade will change.
There's no Control Z on here.
Yeah. There isn't. So you can't control your trade unfortunately. So you need to either manually put it back, and I recommend that, so it's still be inaccurate. So you need to actually double click it and just reset the parameters. Right? And you need to change whatever it is, modify. So that, yeah.
Wow.
Yes. And that is annoying. And there should be a way of switching it off, I just haven't looked into it yet. Yeah. So you must do it.
How do you put those, the white and the blue round?
Oh, just yeah, this piece of cake. So just tools, objects, insert indicators, and then sorry, insert shapes in the rectangle. You know, insert shapes rectangle, and you just drag and drop.
Right.
And just
Oh,
put it
Yeah.
in this one.
And when you do that, you can actually drop something else.
Like that.
Yeah.
Okay, but
Because you click.
Yeah.
yeah.
Will your rectangles move as the chart
No,
progresses day by day?
you'll need to put them on that.
Right.
But they're not going to occur that very often. So not that much to do. I mean, with us, it's been 4 in 2 months. So you just see them on our charts, you just drop them. Yeah, that sort of brings me to the end of the section I wanted to cover, and
Yep.
so we have spoken a little bit about risk management. We risk managed 2 trades. We applied them to some real market charts on the live trading room journal.
Yeah.
The dynamic breakout, we looked at variation 2. So we covered that a little bit. We looked at single market compressions. So we can do more of that next week. And yeah, we take any questions really. How is it to drop so much? Wow. Because Pete sent me a text message with that, that's why. I'll answer that now, please.
Listen to that.
I don't remember. Maybe you deleted it. So just in a nutshell, what we covered again, so risk management, we just looked at how we managed to 1%, right? Now we looked at some real trades and how we risk managed using the calculator and using the precise formula. I will use the calculator because it's for real-time information. And then we just looked at that dynamic breakout, which we haven't covered before in trades based on it's a live trading strategy, all of it. And there are instructional videos on everything that I've spoken about today. I mean, we make sure that everything's so there's some sort of backup behind this. So if you look under, everything is generally under LTR. And under getting started, the strategies explained. And there's a video to explain each of the strategies,
cool.
so you can just look through.
This is good for the DVDs too.
No, this is just on the drop.
So now, let's just take a look at what the strategies trade membership program planned at the break of previous few months.
So you go back.
And strategy, how well and chart. But this level here, particular break. Okay.
So that's all there. So have a review of it, you know, we get a little bit of time, and then do some exercises around it, and then come back and then we can do some more questions around it. With the whole goal, you know, of the next couple of weeks and months is just really strengthen all of our knowledge, so that you know knowledge is very strong, and of course off the back of that, a good amount of passion. And then in the meantime, we can follow what we're doing. Right.
Question.
Yes.
Regarding Aussie dollar, the target that we have for the pending trade,
Yes.
yeah,
9036.
yeah, it's not good for us.
9036. Yeah.
Yeah. No, I'll just ask that because like sometimes what I find when I'm placing trades, it doesn't really hit the target, but usually what happens is like it probably hits maybe just it's only a risk ratio 1-to-1. It's not really a 2-to-1. Then it passes back off to the stop loss.
Okay.
So would you recommend sometimes? I mean, it takes about like this. It hits that price around like March. I mean, that's still close, but sometimes we have targets which are prices for like 6 months or even a year.
Yeah.
Would you not recommend that we have a risk of 1-to-1 instead of a 2-to-1 risk?
Yeah, see, this is a good question. What I would say, what I would say is no. But let me give you an explanation behind that. But then what I would also say is yes, and let me give you an explanation behind that as well. Okay, so diplomatic, right?
There you go.
So what we do is, see, the first of all, let me explain to you why these targets are being here. Okay. So generally speaking now, you just take a step back from the whole thing, and if you look at, for example, this is a very good example, okay? If you look at, this is a daily chart of the euro against the US dollar, right? Now, I don't know where this bottom axis is. There we go. Right, so now if you look at this chart, the euro against the US dollar, this is generally speaking an upward trend, right?
Yeah.
Now, if you look at this period here, right, this is a nice smooth upward trend. Smooth upward trend, smooth upward trend. Now, if you look in the last 4 months, as the market is sideways, yeah, there have been no smooth moves. That's the reason the targets aren't there here. So if you look at times like this, then yeah, you should hit 2 hour targets all day long. Now, here's the question: when does the market start to trend smoothly again? That's why we continue to place targets for a 2 hour. Okay, and May is a good month for moves, right? So I will continue placing trades for a 2 hour. However, all right, so that's why I would say no. But now let me tell you why I say yes. Because what you can do is you can stipulate in your criteria that you will go for a 1-to-1 reward risk ratio. However, what I would do, I'll do it consistently, okay, and across all the trades. I wouldn't pick and choose.
For a certain period.
Yeah, for a certain period. You can say, okay, look, up until the end of June, I'm going to take a 1-to-1 on all of the trades that I'm putting on, right? And then let's measure the results. And to be honest, if you had taken a 1-to-1 from January through till now, you'd probably be up net the LTR, right? I haven't looked back, but I know, and I personally know, because I do this every day, how many trades have come to close within like hitting like 10 or 20 pips of the targets and then turning around. And let me tell you something, that is annoying, right, for a rookie. But once you've seen it and done it and felt it enough times, I've seen so many trades, my own personal trades, that have missed target by 0.5 pip, right? And I'll call the broker and argue, right? But even though I know they won't do anything because the market didn't go there, it's nothing you can do, right? So let's do it for the sake of it, right? It's frustrating, right? 0.5 pip. Right? So that's annoying. But the thing is that if you're going to do a 1 hour target, do it consistently and give yourself a cut-off when you're not going to, or do it permanently. But don't do it chop and change.
Yeah. Can you do it like for the period the side goes sideways, oscillating?
That's my question. How do you know when it's not going to be sideways?
Or it starts moving up or down?
Then you need to have a criteria for defining what is moving up and down. Because you're right. Yeah, I agree. But have a criteria for saying that, okay, for example, let's say once this 500 pip range has been hit between high and low.
Yeah, that you can have a base, when the market crosses that line, which is, then you start moving up to ratio.
You could say that. But then if you're looking at it at this point here, why is there any reason to believe the market's not going to continue to trend beautifully and smoothly upwards?
Either way.
Yes,
but when it's crossing.
But what I'm saying is that, you see, if you're looking at it like, let's say you're looking at it, this is the end of, this is basically December, the beginning of December, okay? There's no reason here at all to think that the market just won't upward like it has been. And look at the smooth, beautiful move. And this is where we made a lot of money, right? Look at the smooth, beautiful move. Why should it not carry on doing that? And define what is it that will be a sideways move for you to take a 1-to-1.
Well, these are happy days.
Yeah.
And there, I'm not so happy.
But which is fine. But again, we need to define that if we change criteria, right? I totally agree with what you're saying. Don't get me wrong. Right? No. I'm a fan of it.
Can I just ask another question regarding the idea of having a...
First of all, I haven't answered your... Have I answered your first question?
Yes,
all right.
but I'm just wondering, for the period that you say, if I trade for, say, certain months, like for a period of 3 months, it's just like I set it myself.
Yeah.
Yeah, it's just sort of like a history log that I have.
Yeah.
For future, if I need to go to the bank in minutes.
Yeah, correct.
Yeah. That's it. So the period of setting, say, 1 month or 2 months, or 3 months, is depending on me. Like,
yes.
It's not really depending on the strategy or whatever it is. Like,
no, I mean, as far as we've seen, the strategy historically has gone through drawdowns like it's going through right now. Frustrating, annoying, yes, agreed. Yeah. Even more so for me because I have to listen to it from 150 people. But it's okay. But the point is that it has started drawdowns and it will return to when the market starts to trend. And it's about being patient. And I said this from the beginning, right? It's about being patient. We're rocking here. I mean, I don't see any problem at all. And actually, the beautiful thing is, if you look at the results from the live trading room, if you look at what we're doing during this period in terms of taking the loss, it is minute. Our losses are tiny.
Yeah, in comparison with your winnings.
Exactly.
We
So that
just
basically-
started, so our losses are in comparison.
Okay, it makes sense. But you also have a long-term view, right? Which is why you are where you are, right? So you don't look at things
Yeah,
over
we
3
do
months.
have a long-term.
That's what it is. And you can see that when we take a winning month here, this month is a 5.86% month. So 2.27, 2.74, 8.19, 7.56. So when we take big months, they're very big, and they'll double all of the losing months. That's what I'm waiting for. So we still be patient. But in the meantime, if you take a 1-to-1, I would do it consistently up until a certain point. You say I'm not doing that. Just be consistent. So you said your last question was you should log everything down and
No, it's just oh yes, regarding fundamentals, should you not be reading up on news? Because sometimes, say, employment issues do come up, say US or like UK, and then certain news comes up, and then market goes straight down or straight up again. Would you not, at those times when the news are released, that you would sort of like change your sort of exit strategy or?
yes. Again, fantastic point. And I'm very cautious around trading around high news announcements. I'm very cautious about who trades on around high news announcements. There was a trade I put on Dora yen, which was a day before Hong Kong Euro. We dropped the risk down just because of that. But what I would say, you should be reading up. I don't think it's necessary. I haven't personally ever done that. News, from my understanding of looking at these charts for like thousands of hours, news is basically like the fuel that goes into a car, right? It's basically going to make the car move. The direction in which that car is going to move is determined by other things altogether. But we know the news will provide fuel. It's going to provide movement here, right? So it's providing movement. You can read up, you can be an expert, you just won't still have enough knowledge to be able to predict direction, unless you look at technical analysis as well. So what we do is we primarily look at technical, and we use that to gauge which way the movement is going to be. And when the fuel comes in, when there's more fuel kicking in as and when, then great. It's just going to make things better for us as well. It doesn't really make much of a difference. But for us, I'm not saying that people that look at fundamentals are wrong or anything like that. I'm not saying that. But our stance, our style, our approach doesn't take into account news.
Can you show, well, everyone does, sometimes when we're following the journals,
Yes.
we want to put the trades, it throws it out. It doesn't accept it. Market trader, it doesn't accept it.
Okay.
What do we do?
Right, okay, it's a good question. I think I know why.
You don't do that or?
Yeah, when you put the order, you put the entries as per the journal, it doesn't accept it, it's just like boom, and it's like,
Because it's too close to what you like.
yeah.
So in this type of situation, the first thing to do is to do what you did today, which is called Easy Forex, right? And say, hey, you know what, this is my account number, I want to put this trade on, and it's not the hell happening.
It's 9 o'clock in the evening, we'll listen to you, we want to put it at 10 o'clock, the trades in.
Easy Forex opens 24 hours a day, 5 days a week.
It usually you put some wrong number.
No, sometimes
Right,
it's
okay,
not,
so now,
sometimes we check and
so
it's not.
that's the first thing that I would personally do.
And they would put it on?
They can either put it on for you, or they can explain to you why it's not happening.
Okay.
Yeah. That's the first thing I'll do. The second thing I'll do is check a couple of things. How close is the current price to your entry level?
Yeah.
Okay. Because Easy Forex, you use what's called guaranteed stops. Now, basically, what that means is if the market gets to your if the price gets to your stop loss, and you don't want to lose more than that $200, they guarantee you won't lose more than $200, right? They guarantee that. So let's say you put a stop loss right here, and the market is trading up here,
Right.
and the price starts to fall, and the price falls really aggressively, really quickly.
Oh, okay.
Easy Forex will guarantee you'll get out right here. They'll guarantee that. But because they guarantee that, they also have a certain distance from where you can put your entry order
Oh, okay.
if the market is down here. So I think it's a 10 pip cut off. So if you want to get in at 0.8920, if you want to get in at 8920, which is here, 8910 is where the price is, you won't be able to put that order on. You'll put a pip above or something. Yeah? So you'll have a 10 pip cushion. That's the first thing. The second thing to check is where is the price in relation to your order. Okay? Because we use buy stop and sell stop, it means that you need to satisfy certain criteria. So let's say you want to, this is a buy order, and you want to get in right here, buy stop. You want to get in right here. So now, you need to make sure that the current price is here, right? Current price is here. If the current price has already gone beyond your buy stop, you need to change this to a limit. Buy limit, and then when the price comes back down here, and then it can go back up, that will enter you in the trade. If you try and put this, just set the T word as on camera as well, the guys will make you press ups.
Right.
Yeah.
Do some press ups.
Not now.
We've got it.
It'll be highly unprofessional. So if you attempt to put your order on here, right, and you put it as a buy stop, then you will be you will not be able to put that trade on. We'll say unaccepted market something, right? At that point, you need to use a buy limit. Available in the same place as a buy stop. Okay, that's the next thing. The third thing I would do is check the figures. Sometimes I'll keep the figures in wrong in the journal, right? Just because I'm in market, right? So check the figures, right? Maybe check them with each other, right? To make sure that they tally and you're doing what they're saying, right? And if there's an issue, drop me an email, I'll correct it, or you can correct it in the journal to make sure you can say that. Yeah. Right. So those are the three things that I'll check straight away. If none of those work and you haven't done step one, which is call Easy Forex, call Easy Forex because they'll help you out. Yeah. Obviously, Easy Forex is a broker, they facilitate trades, it's in their best interest to help you to trade. Otherwise, they don't charge for the account, they don't charge you to put money, take money out, or whatever. You make money for these trades. So it's in their best interest to you. That's why they operate a 24-hour helpline, they'll be able to assist you 24 hours then. Okay? And they're really friendly as well. So.
Kind of forget that they are 24 hours.
Yeah.
So the guaranteed stops, do they
Guaranteed
charge
stops.
you any extra? Because I do the charge.
I know that's right. Yeah. Easy Forex have guaranteed stops.
Guaranteed stops are your stop limit. It's your stop loss, isn't it? Or is it something different than that? Guaranteed stops.
Guaranteed stop is a guaranteed exit from the market at a certain loss level. Yeah.
Notwithstanding your stop loss itself. This is in addition to your stop loss, yeah?
No, this is the stop loss. Yeah, this is the stop loss. This was going to specify that I wanted to put my stop loss at that level.
Yeah.
No matter what the market does, how fast it falls.
Yes.
At non-farm payroll, the market moves very quickly, am I right?
Right.
So non-farm payroll, biggest news announcement in currency markets. Market moves very quickly. They will guarantee if you've got a stop there, they'll satisfy your stop there. Right. That's it. It's guaranteed.
Yeah.
But that's almost like a broken.
Guaranteed stops.
No, I don't. I do it for them.
Definitely.
They do it to check it.
Okay.
What's the break the link?
Oh yes, quickly, advertisement. Yeah, thank you very much. So, this is going to be like a rocking conference. You came last year. This is where we met, this is where we engaged. We're so thankful, I know. So this is a fun video of me through. If you want to have fun later, you can watch that.
Is this the video that you just shot recently?
No.
Oh, okay.
That's a different one. So we're speaking, so we've got a couple of guys coming on internet marketing, property, investing, business systems, and success mindset. And we're talking on financial trading. So it'll be a really awesome day. I know you're in Blackburn or something, right? Newcastle. There it is, Newcastle. So if you can come, it's going to be such a cool day. We did it last year. We had, last year 150 people came. This year 200 something people are coming. So it's going to be a lot of fun, and we just get to tell the world about our message, and everyone else gets to tell the world about their message. We kind of resonate with the fact that trading doesn't nail it for everyone in the sense that it doesn't vibe with them, so we always give people other options as well. That's our way of serving, right? And these guys' way of serving as well.
So you can maybe mention what the other guys do.
Nick James is a professional internet marketeer, so he can teach you how to make money online using websites and using the internet. Simon Zucchi is huge in the property world. He teaches property investing, and he teaches people how to make money from property and invest into that. Obviously, we're traders. Warren Cass talks about business and business setups. So how to build a business and then finally extract yourself from it so it runs in automation. Yeah. And then Ed AK is talking. He's emceeing the event, and he's going to be talking about the success mindset.
Beautiful.
So the glue it brings everything together.
And you guys are actually organizing it.
Yeah, we're organizing. Yeah, that's right.
Nice.
Yeah, so it's our thing, so all of the information's on the website about what these guys do and stuff like that. The tickets are chargeable, but if you want to come, just let us know, we'll give you a free ticket, not a problem. And yeah, it is going to be a really good day. If you have friends that want to come as well, amazing way of introducing them to different stuff. So it's going to be cool. We've got 470 registrations as of the last count, so it's going to be, yeah, for this. So it's going to be really, really cool. We put a lot of energy into this, trying to get out there and show people other ways of doing stuff.
Do I need to shoot you an email?
Yeah, or you can tell me now. I'll leave Sebastian a note. He'll sort it out in the morning. Yeah.
Please, yeah.
And then yeah.
People who come last minute, how much?
Say again.
Friends who come last minute.
Oh,
What would they pay?
at the last minute. At the very last minute.
Well, like this,
The
they
door, the ticket's £19.
19 on the
Yeah,
door.
with a discount for £19.
Yeah, because
It's
that's
19 quid.
Yeah.
That's the price of friends and family.
No, £19 is if you're paying on the door or whatever.
Okay.
But if we can kind of know like fast, then we can just key on free ticket. We
Okay.
have around an allocation of free tickets.
Oh, cool.
Big we're organising. All the speakers had an allocation of free tickets. They've expired. We've got a few left.
That'd be great.
Okay, yeah, fantastic. If they can check, it'll be brilliant. Christina, you should cancel Newcastle and come
I really want to go actually, so, yeah.
in. Okay. There you go. Jacqueline, you come?
Been last year?
Oh, you did go last year.
But you don't get very often, so.
We do. Well, no, yeah, once every 6 months.
How did you rate it? How did you rate
That's
it?
good.
It's very motivating, isn't it?
I had
So
two
this is-
speakers last year.
Yeah.
Yeah.
No, this guy was.
Because of
Let's put the board meetings.
summer speakers.
And
9 to 6 is
earlier.
Yeah.
Elliot was
We're doing it in Trafalgar Square in the Sofitel Hotel. It's
Yeah.
beautiful.
Was it Trafalgar
This
Square?
one really fun.
Yeah,
Really
yeah,
nice
it's
restaurant.
next to Trafalgar Square.
Yeah, it's true.
I don't know whether you actually not sure.
Let's just play.
now Piccadilly Circus.
We get
Yeah, but just to walk down, you come up to Piccadilly, you just
Yeah,
walk
so
down.
gorgeous, like, you have to be there to experience it. It's a beautiful hotel. And this year we're doing speed networking at lunchtime. So we're getting people to bring their business cards and we're going to arrange some speed networking so people can talk for like 30 seconds about their business time. It's really cool.
Nice.
Yeah, so
Saturday, 31st of May, right?
indeed it is, that's right.
You've done quite cool, like interactive games.
Mhm.
It's really, I don't know if he's going to do it again, but it was really cool. It was like, you still remember it. Something. Once you did something, you remember it.
Right, so, okay, fantastic, we'll do that. Right, so that's happening there, and there are no other announcements here. And also evening, it's, oh, let me help you guys set up some
If you
stuff.
don't
Are you
mind,
okay?
that'd be great, yeah.
I should be fine now.
Okay,
But
alright.
I'll come on Thursday anyway, so we'll do
Okay.
it.
Yeah, that's okay, before your 9 o'clock.
Okay, well, thanks for coming down, guys.
Thank you, Rashid.
Oh, it's mine.
Nice to meet you.
No, it's very
Nice to see you, Christina.
Nice to see you too.
See you next Tuesday with the company.
Yeah.
Yes, absolutely.
Okay.
You too.
I'm gonna hopefully get my account set up and then I'll do some demo trade. Yeah. See you next week.
Bye now.
Bye.
Oh, yes. Yeah.
Richard, does it take a long time to download the software and stuff or?
Yeah.
In fact, you can help me. Have you downloaded it yet or not yet?
Late June.
I had the I had a what's it called? It expired. So
Oh, it's just it's fine. That's there already. We'll reinstate that. That's not.
Okay.
We don't need to download anything.
No.
That's not.
what's
Okay,
the
Dropbox? Have you got Dropbox downloaded?
no?
Okay, let's. Do you use Dropbox?
Okay.
Yeah, that's what
You do.
Yeah.
Okay, do you know which email your Dropbox?
IGAYMAN.
Okay.
Just a second.
When I'm the internet here, what's the?
Anyway, you know what? Next door. Sorry, not Amy.
Oh, you have to.
Next door, the pivot server.
I didn't like
I'm just going to grab that. Give me 2 seconds.
Okay.
Yeah.
Thank you.
Right.
But I think
Um,
they're
hey,
recording it, then you can ask Rishi.
Oh, yeah?
Are you on Skype?
I am on Skype, yeah.
You are. Are you on Skype currently?
No, because I haven't got the internet.
Okay, no problem. But you so we need to get that for the next credit anyway. Let me give you my password.
Oh,
For 2
perfect.
seconds.
Yeah.
Richie, may I have a quick question?
Absolutely.
Are the recordings for last week available somewhere?
Which one?
Last week was with Kilo.
Oh,
That's
yeah, it
perfect.
is. Yeah, it is. Yeah.
So,
Trading gig.
I would like to
Sorry?
see that.
The trading gig.
Yes, that's what I understood.
I'm not trading at the moment. So.
Okay, no problem.
Building the knowledge base.
Yes.
Can you send it
Maybe go
to
to state. So
Sebastian?
I'm learning first.
Sure.
Yes.
Because it's much
It's
easier.
on that camera.
What mistakes did you make first time?
Actually, it's on that laptop.
Risk.
No.
Risk management, not planning, but I would say key measures.
Everything's overtrade. So in this will be
As you what, spending too much time on it?
No, taking too
Spending
many
everything.
trades. Should not taking too many trades.
You're focusing on
The
all
next
these trades at the same time.
He has unlisted links, so not
I
everyone.
take a trade, it's a loser, I take another one. Too many
That's
trades.
good. Okay, thank you very much.
Quality of trade is not good.
Alright.
Was that because you didn't have a strategy or?
No, I thought more was good.
See you guys.
But in
See you,
trading,
nice to meet you.
in trading, quality matters.
Well,
Some people go throughout a month without taking any trade at all.
Yeah.
And when they take trade, they make
Quality.
quality.
And did you have the strategies that they taught you?
No.
Okay, so that makes a difference.
No, but I was learning on my own,
Uh-huh.
and I teachers over the online teachers
Got you.
who don't explain properly.
Yeah.
They promise you this, but never. This is good because they actually explain and you understand.
Yes.
You know why
Why you do it.
What you're looking for, what the trigger points are.
Yes. I think with this guy, if you really listen and learn,
Yes.
you become independent. You can do it for yourself. Yeah. But over trading is terrible.
Oh, that's the
The
thing.
risk management is critical. Like this question this lady asked, that's 1-to-1 ratio. In the long run is what matters.
Yes.
There you go. That's
You. Performs